And this is part of a research project that I kind of got interested in, let's say, summer of 2015. And part of how it started was, I'm not from the Midwest, and I moved down here, first time I've ever lived in the South, and one of the things that I noticed as I was kind of driving through different towns is the number of payday loans and title loans in Alabama. And so this got me interested in it. This project started, we did some GIS analysis and looking at where payday loans were located in connection to different neighborhoods and things like that. Jocelyn's going to talk about that. And then it finally emerged into a qualitative component where we actually had Josalyn go out kind of into the field and do some participant observation. And she's here to talk a little bit about what she found and then also some of the difficulties that we had in gaining access to this kind of into the payday loan and the title loan industry. So without further ado, here's Josalyn.
Okay, hey guys, I'm Josalyn. I'm a senior at JSU. So this is our research project, Cash in a Flash, Payday and Title Loans in Alabama. Okay, there we go, cool. To give you a bit of a perspective, in the state of Alabama, for every one McDonald's we have, there are 4 payday loan businesses in the state of Alabama. And we also have, here in the state, more title loan locations per capita than any other state in the country. So where are these payday loan locations at? These are, businesses are located mostly in areas that have higher non-white populations, around urban centers, areas that have more active military personnel, less educated populations, and higher poverty. These are also businesses that tend to thrive where there are less traditional banks and credit unions and things like that. So people who have a hard time with access to more traditional loans and things like that, they tend to turn to these kinds of businesses. So is there a need for payday loans and title loans? Well, a lot of people use them for financial emergencies, like certain times of the year, holidays, birthdays, things like that. And then also for basic needs, medications, bills that come up, unexpected medical bills, things like that. And there's also a very strong demand of payday loans and title loans around younger populations, with moderate incomes who have difficulty getting access to more traditional loans and things like that. So just a little information on payday loans and how they work. In the state of Alabama, the interest rate for payday loans is 17.5% for every $100 that you borrow. So if you borrow, and the max amount is $500. So for a $500 loan, that's an interest of $87.50. The loan length for a payday loan is the same as your pay period. So if you get paid every week, then you are required to repay your loan in that week's time. If you get paid every 2 weeks, it goes with that and everything like that. Payday loans are labeled as more regulated. To get a payday loan, you have to provide like a pay stub, your bank statement, bank account information. You have to provide a blank check to the loaners, and a utility bill in your name that proves your address, and of course an ID. Title loans, on the other hand, they're a little bit less regulated. You don't have to provide as much information when you apply for a title loan. Of course, you have to have a clear title in your name. You also have to provide a spare key to your car and your ID, but you don't have to have as much as far as like the utility bill and your bank statement and things like that. The interest rate for title loans varies, but they're usually around 25%, but we'll talk more about the interest rate for title loans in just a minute. When you're getting a title loan, they use the auction value of your car, so they appraise your vehicle and then they give you like how much they think it would be, the auction value, or up to 33% of your income, so they can't go over that amount. And then the loan length for a title loan is around a month, so you have a month to pay the loan back plus all the interest and everything like that. And if you can't pay that back in a month, then your car will get repossessed. So what's the issue? People who can't pay off their loans, they get stuck in what's called a cycle of debt. They get trapped. With every time their loan rolls over, there's a new fee added. If you have to reborrow, you have to pay the interest again to the new principal. If there's principal left over from the previous, like if you have a title loan that you reborrow and there's interest or principal left over, the interest rate stays the same and that rolls over to your next loan. And then 80% of payday loans are renewed within 14 days. This means that within 14 days of taking out the initial loan, they have to reborrow that money because after paying that loan back, they can't afford to live. So where I come in on this project, I went to 15 different payday and title loan locations in Northeast Alabama. I gave them a backstory about how I was going to have my wisdom teeth taken out, and even with my insurance, I couldn't afford to pay for the surgery, and so this presented a financial emergency where I needed money, and I was just trying to check out my options, basically. I went in and I asked questions about their interest rates, which was better, a title loan versus a payday loan, if the employees had any personal experiences taking out these kinds of loans, and if they would recommend it for a friend or a family member. The conversations usually lasted around 10 minutes, some were a little bit longer, some were less, and then I transcribed them and we coded and analyzed them for patterns. So all of the employees that I spoke with started out listing all the proper documents that I would need to take out a loan. Like for a payday loan, I needed a blank check and a bank statement and proof of my income, like my pay stubs, and of course an ID. With a title loan, those require less paperwork, but of course you have to have a clear title, and a lot of them you have to give them a spare key to your car when you apply for the loan. And then with the title loan interest rates, those vary depending on the amount that you borrow. A lot of people told me that the more that I borrowed, the lower my interest rate would be with a title loan. Out of the places that I went to, 8 of them offered payday and title loans, and so at all of these places I asked which would be better for me, a payday loan or a title loan, and most of them told me that title loans were better. They were considered the cheaper loan because of the interest rates. Most of them were very persistent on having me apply for a loan or have my car appraised right then and there. A lot of them asked me multiple times if they could look at my car. And then all of them gave me business cards, but only some of them had like information pamphlets or brochures or things like that for me to take with me. So we were really looking at how the employees interact with their customers if they try to sell a larger loan amount or things like that. Out of the places that I went to, 8 of the locations tried to persuade me into borrowing more money. They did this by saying things like, I could take care of other bills at the same time, go ahead and borrow more and knock those out at the same time, pay those off. Or they would say things like, we can get you a lower interest rate if you borrow more money. Or they would tell me at the payday loan places, if I got a payday loan, that if I couldn't afford to pay the loan off and then, pay all my other bills and things like that, that I could just turn around and reborrow, and I would basically be paying the interest and they would just be giving me my money right back. And that was at 8 of the 15 places that I went to. Something like that happened. Some places were more practical, but only 3 of the places that I went to out of the 15 said things like, borrow the least amount possible and pay it off as quickly as you can so you don't get stuck, and things like that. However, all of the places did emphasize that only making the minimum payments required would never pay off the loan. Like on a title loan, whatever the minimum payment was, that was only paying the interest. They all told me that if I wanted to pay the loan off quicker, then I would have to pay more than just the minimum amount borrowed. So here's the question. Are payday loans and title loans, are they a foe or are they a friend? Do they exploit their customers, or do they provide a needed service to the community? There has been research on how states that have banned these kinds of institutions, how they have higher filings of bankruptcy and things like that. And there are regulations that are in place to try to control the exploitation of the customers, like extending the minimum requirement, minimum repayment period, Or in Anniston, there's actually a limit on the number of payday and title loan businesses in a certain area. There's also a database of the places where loans are offered, so you can so they can keep up with who's following the restrictions and things like that. And there is a $500 limit on payday loans in the state of Alabama, so if you do get a payday loan, you can't borrow more than $500. And then there are programs that inform communities and about resources that are available instead of payday loans and things like that. And then we're just trying to bring an overall awareness to the practices of the title loans and payday loan practices. Any questions?
Did they know they were being recorded?
No, ma'am, they did not. We decided not to tell them, they didn't know that we were doing research, because we wanted to have authentic interactions. We wanted it to be unbiased. I wanted them to treat me like they would any other customer, and we knew that if we told them that they were being researched, then they wouldn't treat me the same. So we wanted to have, we didn't want to have any issues with that.
Did you tell them after you finished your interview?
No, ma'am, I didn't.
So they never knew, none of these places ever knew they are part of a research project?
Correct, but it's all kept completely confidential. We don't even name the towns that we went to. It's all just Northeast Alabama. So the employees and the locations and the towns are all confidential.
You said we had the most in the country?
Yes, ma'am. The state of Alabama, we have, for every one McDonald's, there are 4 payday loan places, and we have more title loan places per capita than any other state.
How, do you know, did you all look to see how our policies are compared to the surrounding states like Mississippi or Tennessee?
I know Georgia doesn't allow these kinds of businesses at all, and but as far as like regulations and things like that, Alabama is one of the, we have fewer regulations than some of the other states.
In terms of like APR, and like lower APR, I think ours is like one of the highest in the country, where other places kind of limit that how high it can get. I think ours, we don't have that, we don't have a cap.
It can go up to 400 and some percent.
Yeah, it's like 420 or
So
something like that.
what you're going to pay on a $500 loan, if you do not pay it back in a week's time, is asking that $87.50 each time it goes up. So your $500 loan, depending on how quickly you got it paid off, is very likely to be a $1,500 to $2,000 loan.
Yes, ma'am.
That's the way
I have a relative in this business, and I'm on your side of the issue, I promise. But his argument is always, no bank will touch these people. If it's not for us, they have nothing. So whatever if they're going to lose something, they're going to lose it right now. If we help them, they might still lose it, but no bank is going to care about them.
There was a lot of literature that addressed that also, that was part of the need for it. Like people who don't have access to these, they tend to file bankruptcy more and things like that. So, that's why it's kind of tricky. Like there is a need for it, but at the same time, they're taking advantage of their customers.
Sure, it's like a legalized loan shark.
Exactly. Yes, ma'am.
The people that you interviewed, were they just happened to be the person that you got when you walked up to see? You have no way of knowing if what their answer was very consistent with everyone else who worked in the store, worked in the payday loan.
As far as like that work in the store with them, I mean, not really, no, because I usually just talk to one person.
Any other questions for Jocelyn?